Hello everyone. In this brief video summary, we will examine whether our AI-based S&P 500 sentiment indicator is a better measure of market regime changes and downturns versus other indicators and tools available today. MSDX stands for Message Sentiment Decay Model, and this is a proprietary algorithm that derives sentiment based on news stories and takes into account past and present news sentiment in order to accurately measure an aggregate sentiment for the S&P 500. So Ravi, let's kick things off. Can you describe to our audience what are some of the available measures of investor sentiment? As of late, we've seen some indicators such as the VIX index struggle to keep up with market regime changes. Could you provide some further color to this point?
Sure. Sentiment is not new. In the old days, investors gleaned through the Wall Street Journal or picked up conversations over coffee on Wall Street to gauge the mood. With the exponential growth of data, several proxies are used today: retail investor trades, mutual fund flows, trading volume, and of course VIX, which is the implied volatility of the market, also known as the fear gauge. However, all of these are macro indicators and not available at the individual ticker level. The StockSnips MSDX signal is continuous and at the firm level for 5,000 US equities and has been extensively validated for alpha.
Fantastic, thanks Ravi. And we've mentioned this term MSDX. I think this illustration gives a bit of a better overview. Can you walk us through how the MSDX indicator is derived?
This figure illustrates the process of transforming news stories to a quantified sentiment score on a continuous basis. The news stories are from 20 plus sources, including the company's SEC filings and earnings transcripts. We use natural language processing to read and understand the stories and opinions expressed in them about a firm's prospects. News includes company-specific information as well as the impact of macro indicators like inflation, recession, rate hikes, and the Ukraine war. The news snippets are then classified as positive or negative using a machine learning model. The S&P 500 sentiment comprises the aggregate of the ticker sentiment of the 500 components of the index. The model MSDX takes into account past and current sentiment by weighting source, volume, and frequency of news.
Awesome, thank you for that overview, Ravi. And kind of moving on into this example, we've obviously seen two major market events in the last 2 years. COVID being one at the beginning of 2020, and then beginning of 2022, a lot of market regime changes stemming from inflation, the Ukraine war, and such. Can you walk us through this example and how StockSnips MSDX signal was able to capture the price movement surrounding this type of turbulence?
If you look at this chart, the green is the daily sentiment of the S&P 500 sentiment, and the red line is the 200-day moving average of the daily sentiment. And you can see here that the S&P 500 sentiment went below the 200-day average on February 11th, 2020, and this was due to the onset of the COVID fears, the breakout of COVID and the spread of COVID worldwide. You can see that the sentiment started to decline gradually starting February 11th, and that the price action followed on the 23rd of February 2020. And as you know, you'll see that the VIX also reacted and it reflects the increase in the VIX price, which is on the next chart. And you can see that the VIX reached a peak on the 16th of March 2020. So the StockSnips signal started declining in February. The VIX kind of moved a little slower, but it reached a peak. And as you know, that the market downturn subsequently followed around the middle of March.
Awesome. And I think that's a really useful example just to show the strength of the correlation that the MSDX signal has when compared to the VIX. Funnily enough, moving on to, the downturn that we're facing now, we can see a similar trend of the sentiment decreasing. But if we look at this example, the VIX did not necessarily capture that. So again, Ravi, if you want to walk us through the more recent example.
Yes, this is now we're examining the period January through June 2022. And there were several headwinds here, inflation, rate hikes, the fear of recession, and of course the Ukraine war and the rise in commodity and energy prices. So the market did not go down in one big swoop like we saw due to the COVID fears in 2020. But you can see here, this is more of a drip over a period of 4 or 5 months. And the sentiment actually started going down as early as January 25th, 2022. It did kind of, bounce back a little bit, but again, started going down in February and continued to go down all the way through April, May, and June, and stayed below the 200-day moving average. And you can see that the price actually started going down on the 7th of April and really took a downturn in May and June. So again, in this case, the StockSnips MSTX signal was a much stronger indicator of price action than the VIX, which you can see from the next chart, really did not provide any guidance. It was really oscillating between 20 and 32 and really did not, react the way it reacted to the COVID fears. So, like I said, VIX is useful. It's useful as a tail risk, black swan type of events, but, events like this where there are several factors and these don't happen in one given day, I think our signal, the sentiment signal is a much better indicator of market action.
Awesome. Thanks, Ravi. So for anyone that is listening, if you are interested in learning how you can introduce the MSDX S&P 500 indicator into your investment strategy, please do reach out with any questions. Again, just a couple of takeaways: that this signal is a very strong complement to the VIX. It is also measured on a continuous real-time basis, systematic and proprietary. We look forward to hearing from you and stay tuned for future short briefings. Thanks.